Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
My overall assessment is that the current stance of monetary policy is generally appropriate in that it is providing support to the economy by encouraging further labor market improvement that will help return inflation to 2%. At the same time, I continue to think that the federal funds rate probably will need to rise gradually over time to ensure price stability and maximum sustainable employment in the longer run. Several considerations lead me to this conclusion. First, the current stance of monetary policy is stimulative, although perhaps not as stimulative as might appear at first glance. One useful measure of the stance of policy is the deviation of the federal funds rate from a neutral value, defined as the level of the federal funds rate that would be neither expansionary nor contractionary if the economy was operating near potential. This neutral rate changes over time, and at any given date it depends on a constellation of underlying forces affecting the economy. At present, many estimates show the neutral rate to be quite low by historical standards, indeed close to zero when measured in real or inflation-adjusted terms. The current actual value of the federal funds rate, also measured in real terms, is even lower, somewhere around minus 1%, with the actual real federal funds rate modestly below the relatively low neutral rate. The stance of monetary policy at present should be viewed as modestly accommodative. Although the economy is now fairly close to the FOMC's goal of maximum employment, I view our modestly accommodative stance of policy as appropriate for several reasons. First, with inflation continuing to run below our objective, a mild undershooting of the unemployment rate, considered to be normal in the longer run, could help move inflation back to 2% more quickly. Second, a stronger job market could also support labor market improvement along other dimensions, including greater labor force participation. A third reason relates to the risks associated with the constraint on conventional monetary policy when the federal funds rate is near zero. If inflation were to move persistently above 2%, or the economy were to become noticeably overheated, the committee could readily increase the target range for the federal funds rate. However, if inflation were to remain persistently low, or the expansion were to falter, the FOMC would be able to provide only a limited amount of additional stimulus through conventional means. These motivations notwithstanding, I continue to believe that it will be appropriate to gradually reduce the degree of monetary policy accommodation, provided that labor market conditions strengthen further and inflation continues to make progress toward our 2% objective.
So I actually think, so that's obviously the video that's from Bloomberg, and I put it up there. It's on Bloomberg.com, and I thought I'd show you guys that video before I start talking. I think, guys, that the federal fund rate needs to rise gradually over time, and that's what she's thinking. Now, as she just said just there, that by historical standards, the interest rates, basically the federal fund rate, the interest rate is actually really, really low. But if the economy is so good, like Obama's saying, then why aren't the interest rates higher? Why aren't we getting more inflation if the economy was so good? Things are moving, things are growing, things are happening. Why aren't we getting that? To me, it sounds like that June interest rate is off the table right now. It doesn't seem like they're going to be doing anything in June. There's going to be no surprises there. So there will be no June rates. And it's really interesting, guys. It's really interesting. The last time they came out and said it could be a really good chance of raising rates in June. When she said that, then suddenly we get the worst jobs. And if I scroll down the bottom here, and suddenly what happens is we get the absolute worst jobs report since 2010. And as you can see, this is it here. It's like, and then soon we may even start printing a negative number. So there's actually no jobs. It was actually all lost jobs. So you can see that there, and it's like, hang on a minute, this just doesn't make sense here. And then suddenly I think the overall unemployment rate dropped to 4.7% instead of 5% or something like that. It's actually really, really interesting. So for me, guys, June, it seems like to be off the table when it comes to a Fed to a interest rate rise, and as she also said too that the actual Fed rates for obviously for the Fed is actually -1. So this is actually just absolutely just crazy where we are right now, guys. And if you guys are thinking that we're just in good states and good, if everything was moving properly, they'll be able to raise interest rates without worrying too much. But why is it still, after so many years of the interest rate being so low, and then still trying to create this market, the inflation? Now I believe there is inflation going to come through silver, through oil, through gold, as these and you see a lot of the commodity prices, they're actually raising a lot right now, and that's going to cause inflation in the markets. It's going to keep increasing it, and they're going to have no choice soon but to start raising rates to counteract that inflation and start slowing it back down. But right now, especially silver and gold and stuff like that, that's actually going to start to boom real quickly, and you're going to start to see big inflation when it comes to that, when it comes to all that as well too. But if you look at what's actually going on right now, guys, is that I wouldn't believe anything that the federal market, the Fed says, or Janet Yellen says, or the government says, anything like that. Now, when the government, like the President Obama, comes out and says prepare for disaster, that's something that you should start to really focus on, because that tells me, hey, something big that he knows is coming around the corner. Is it a natural disaster, or is it a planned disaster? Because as you know, right, they need a reason for this whole thing to start coming down. They need a reason, and there will be a reason. As the Dutch bank right now is on the verge of bankruptcy. They got $75 trillion worth of bad debts. You've got so many things, and as I said to you before, guys, this is just not United States being where it is right now. You've got the United States property market, which is actually in a big bubble as well too. You've got properties that are going up 30% in a year over there, just absolutely crazy. People putting down a 3% deposit into the housing over there. So just remember, guys, that this here is going to be so much bigger. This collapse is going to be so much bigger. And you probably heard it so many times, but it's so true. And you've got to think of this from a standpoint. You've got to think of this from a logic standpoint of view. If the last crisis was just the American subprime that that basically took one of the banks down and took a lot of the economy down with as well too. Even property here in Australia felt the pullback as well too. So if it was only just America, then it'd be like, okay. But right now, guys, if you start to open up your mind and open up your thinking and open up and see what is really going over here, the property market here in Australia, Sydney and Melbourne has boomed apart from the unit market, but they've boomed, and it seems like everything's going well. But we just dropped interest rates. Hang on a minute, why is that? Because the reason, and if you look at that, the retail spending has dropped by half compared to this time last year. So things are not looking good, and obviously, and I actually think that the Sydney property market has actually boomed just a little bit too much. So you see that's what's happening right now in Australia. You see what's happening in China. China's stock market has actually crashed through there. Their real estate market is going to absolutely get demolished because they've built 20-something thousand more homes, or a lot more people that they're not even going to live in them. Right now, you've got Japan in bad states right now. You've got Japan Prime Minister saying that we're going to get a World Lehman Brothers event. You know, you've got all these, I could go on and on and on about all these countries out there right now that is just not the subprime in America. It's not just that. It's everywhere. You've got student loan debt through the roof. You've got people on, you know, food stamps, you know, going through the roof as well too. You've got layoffs after layoffs after layoffs after layoffs. And that's why, guys, this is just not a one sector event. This is a global event. And there's a lot of talk about the Shemitah and the Jubilee year, and the reason why this whole year is going to be a really, really bad year. And it seems like this next second half of this year is going to be pretty bad. So this is what the Fed's saying right now, guys. We're seeing the worst jobs report in the market right now. But guys, you know, you just got to open your eyes to see that things are just not right. They're just not right. Everything seems to be falling apart at the seams. And it's going to take one thing, just one thing, and then everything else is going to come out in the markets. You watch. Everything else. Gold and silver, I believe, especially silver, are going to spike like hell. Then you got the derivative bubble, like a 1.5 quadrillion derivative bubble as well too. That's actually pretty scary as well too. So it's you know, you just got to look at that. You're seeing property markets, what's happening right now. You're seeing global markets. This is a global event, and now you're saying, and now the the president, America, Obama, is actually saying prepare for disaster. Guys, this is not good. This is absolutely not good. And I don't care what the stock market's doing and stuff like that. Look at the fundamentals behind it, and you'll be able to see the reason why I believe the Dow Jones still right now is still not breaking new highs for the year where all the other markets are doing, because it's showing you something what's going on. And this is getting really, really, really close, guys, to me, to something big happening in the markets. And we're like to see a bam, 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 all the way down. Thank you, man. And I believe we're going to start seeing that real soon. So, guys, here's a quick little news update. What I actually saw in the news today. Just reading this article here. You can go to Bloomberg and check this out as well too. You know, it's just really, really, really interesting. And you know, you got the global bumps that's actually happening through here as well too. So, guys, for me, and what I said before, for me, and looking at what's actually going on in the economy right now, you cannot tell me that the market is going to be okay and everything's going to be fine, and we're just going to continue up to 20,000 on the Dow, which is actually quite a significant move on the Dow, by the way. From 18,000 to 20,000, that's obviously a 2,000 point rise. I don't think so. That's coming 25,000. I don't think so. I think we're going to see a big move on the downside before that happens. And once that happens, it's a domino effect, and all these sort of things are going to come out. So do not be fooled by this rally. There's so many people out there right now that have been bearish, because we've seen a lot of people bearish, including myself, being bearish as this market's been rising up where we are right now. And a lot of those people that are bearish been thinking, maybe I was wrong. Maybe this market's just going to keep going up. In fact, I was reading a Harry Dent newsletter just recently, and then there was a question to him, and one of the questions was exactly that. I've been bearish with you, Harry Dent, for quite some time as well too, but it doesn't seem like this market's gonna, and I'm starting to think this market's never going to crash. That's what the market does. It gets the majority of people thinking something, then does the completely opposite. That's the reason why most people don't make money. So I'm saying to you guys right now, this market may have a little bit more room to the upside, but I think I think this is it. I really do think this is it for the markets. Nasdaq, Dow, S&P. I don't think we blast the new highs. Hey, I could be wrong. But even if we do, guys, there's so many things bad out there that, hey, I believe a black swan event is coming in the markets. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course. And I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.